Next question, let us see. A mutual fund made an issue of 10 lakh units at of rupees 10 each on 1st of January 2019. No entry load was charged. It means that no transaction was collected from the investors who made investment. It made following investments: 50,000 equity shares of rupees 100 at the rate of 160, 80 lakhs. 7% government security, 8 lakhs. 9% unlisted debentures, 5 lakhs. 10% listed debentures, again 5 lakhs. Total is 98 lakhs. During the year, dividend of rupees 12 lakhs were received on the equity shares. Interest on all types of debt security was received as and when due. At the end of the year, equity shares and 10% debentures are quoted at 175% and 90% of purchase price respectively. Other investments are at par. Question number 1. Find out NAV per unit given that the operating expenses paid during the year amounted to rupees 5 lakhs. Then second part of the question is there. We'll read the second part later on. I request all of you to make the calculation of the NAV per unit. Friends, over here, as far as the equity share valuation is concerned, so this 175% is taken of the face value. In a way that this 175% is provided to us as the face value, it means that the market price of the equity share is taken as 175. That is the way we are required to understand. So this 175% is required to be understood not of the purchase price but of the face value. Now the very first thing that I want to tell you, friends, is that whenever there is a question of making calculation of the NAV per unit, you have to see that whether you have been provided with the information about the mutual fund as on date, or you have been provided with the information from the date of inception to the date on which you are required to do the valuation. What sort of information is given to us is what you are required to see properly. That is what you have to understand properly. So the date at which the mutual fund was incorporated, from that date till the date at which you are required to do valuation, that kind of information is given, or otherwise the information is given for the mutual fund as on date. What kind of information is given, that you need to understand properly. See, over here we have been provided with the information that this is the date on which the mutual fund was formed. All the information is provided to us, and it has been given that at the end of the year, this is the situation, and you are required to make the computation of the net asset value per unit at the end of the year. Means you have been provided with certain transactions. In this kind of question, what is the first thing that you have to do, friends? The very first thing that you have to do is you have to prepare a cash book. Yes, you are required to make the computation of the closing bank balance at the end of the year. The questions that we did earlier, in that this kind of cash balance is provided to us ready-made on the date on which you are required to calculate the NAV per unit, but over here, we are required to calculate the same. Let us understand how to calculate the same. Please use your calculator along with me. 10 lakh number of units into 10. So you receive an amount of 100 lakhs minus initial investment that you make an amount of 98 lakhs. Then you receive the dividend income, you receive the interest income, that is what you receive, minus the operating expenses of 5 lakhs. This is the way we will have the closing bank balance and that is the first working note that we need to prepare. So please write down answer. Working note number 1, calculation of closing bank balance, comma, at the end of year. Receipt amount, payment amount in lakhs of rupees. Opening balance is 0. Amount received 10 lakh number of units at the rate of 10, that is 100 lakhs. Dividend income, an amount of 12 lakhs. Then interest income. We have been provided with information that say we have made investment like this. So 8 lakhs into 7%, that comes to 56,000. 5 lakhs into 9%, that comes to 45,000. 5 lakhs into 10%, that comes to 50,000. 56 plus 45 plus 50, that comes to 1,51,000. So it is 1,51,000. Then as far as the payments are concerned, in that say we will have the investments. An amount of 98 lakh rupees of the investment to be made immediately. Then we will be having operating expenses, an amount of 5 lakhs. So use your calculator. 100 plus 12 plus 1.51, that is 113.51. Minus 98 minus 5. So the closing cash balance is 10.51. That is the way the cash balance is required to be calculated first of all. Next, calculation of net asset value per unit. In that, equity shares, we can see that some information is given. 50,000 shares have been purchased and the price at which it is available in the market at the end of the year is 175. Friends, over here the institute has made an assumption that say this 175% is given on the face value, that is 87,50,000. Afterwards we have been provided with the 3 debt investment: 7% government security, 9% debentures and 10% debentures. So 7% government security, 9% debentures and 10% debentures. That is the way we will have. This is 8 lakhs, this is 5 lakhs and this is again 5 lakhs. You can see that the question is providing the information that at the end of the year equity shares are valued at this price and 10% debentures is valued at the rate of 90%. So for this the valuation is 90%. So it is 4,50,000. 7% government debentures, in that so there is no revaluation. It is again 8 lakhs. 9% debentures, it is again 5 lakhs. These are the assets that we have. Apart from that, there is cash balance. The amount of the cash balance is 10,51,000 net assets. So here 87,50,000 plus 8 lakhs plus 5 lakhs plus 450 plus 10,51,000. So it is 11,55,000. Sorry, 1 crore 15 lakhs 51,000. Number of units are 10,000. So 10 lakhs. Based on that, so the NAV per unit it is 11.551. So 1 crore 15 lakh 51,000 divided by 10 lakhs. That is the way the NAV per unit is supposed to be calculated. Let on a small working note for interest income. Working note for calculating interest income. In that write down 8 lakhs into 7 percentage plus 5 lakhs into 9 percentage plus 5 lakhs into 10 percentage. So 56 plus 45 plus 50,000. That comes to 1,51,000. Then I'm done with paragraph. Whenever we are required to compute net asset value per unit, comma, at that time we have to see as on date information given or information given from starting of mutual fund formation. Full stop. In that write down, in this case, always we have to prepare a working note for cash balance at the end of year. That is on the date of valuation. This is something which is important. Make sure that say you are not committing a silly mistake for this point. Second part of the question. Also find out NAV per unit if mutual fund had distributed a dividend of 80 paise per unit during the year to the unit holders. I want you to tell me answer of the second question, that what would be the revised NAV per unit. Friends, answer for the second part of the question is very simple. It is 11.551 minus 80 paise. So it is 10.751. That's it. Because we understand that say if at all you pay dividend, to that extent the cash balance will reduce. That is the reason. So revised net asset value per unit is 10.751. It is 11.551 minus 80 paise. Because when you pay dividend, to that extent the cash balance will reduce.